What's up, guys? Bulls and the Bears here with the weekly recap video. This week, we locked up $372 in realized gains. Phenomenal. We had a trade with Chipotle that helped out a lot. We locked up we closed our JD position for a profit. We got assigned on our CSIQ position. We got called away, so that's going to be gone. But I also sold a put on it for next week to try to re-enter, so that's not officially gone, but the shares are gone at least. Celsius is still kicking, and I opened a new position with Hims and Hers Health. That's been a popular stock that I've heard some wheelers playing, and you know what? I wanted to dip my toes and start a position there by selling a put, of course. And then Clean Spark is still doing its thing as well. So we're going to cover all of it in detail, and of course all the profits. But here is the account. Down 200 today. Celsius pulled back. That's really the biggest thing. But on the week, let's see, up $572. We started below 25K in the 24s at the beginning of the week, or at the end of last Friday, and we had kind of stair-stepped our way up. So that's nice. On the 1 year look, that captures everything of my new revamped wheel strategy that I started in Robinhood at the beginning of this year. Very nice. Started at 20K, and now we're at all-time highs, basically zigzagging up here. So excellent. We have our cash. Still have a bunch of cash right now, which is great because I'm doing the wheel strategy. I'm locking up gains, but I also have a ton of dry powder available to take advantage of any type of dips in any notable companies that present really good opportunities. So feeling really good. I feel like I'm right in the pocket. I know I have trades out there making money, bringing in premium, but I also have a bunch of cash, like I just said, to, in case things get bad. So there's like the downside that you would normally be afraid of, fearful of. I'm not fearful of, because I have reserves to buy the dip and to better my positions. So either way, I'm happy. We're in a really nice spot right now, and I'm going to try to stay here in this pocket as long as I can. So hopefully things stay on the up and up. Here are the positions, like I just said. This is everything right here in this window. The Clean Spark shares, CSIQ, that's going to be called away, so that should be gone soon, probably tomorrow or something, whenever Robinhood updates it. The Celsius leaps, I have two of them, down 450. They pulled back today. That sucks, but it's okay. We have covered calls up here. Two calls at 44. They're already up 56%, so if Celsius doesn't go up, we're still making money because we sold covered calls. You got to love that. Clean Spark cash secured put already sold for next week, already up 40%, but we're still just going to sit on that. CSIQ cash secured put for next week. They have earnings, so I was able to get a really nice level. We'll talk more about that. And then the Hims put at 1450. So let's get into the trading view and go over these charts. I'm going to show you guys what I saw, what levels I bought and sold, and we'll cover the profits as well. So we're actually going to start with Chipotle. I don't know if I mentioned it in the beginning of the video, but this was actually a trade that I made during the week, which bolstered some of my profits. It wasn't necessarily a day trade, or wasn't intended to be a really short-term trade, because I did, after all, buy a leap expiring January 2026. So I did all the right things for a leap, for a longer-term trade, but it gave me the opportunity to close it for a solid profit really quickly. And I tend to take those things, tend to take those opportunities. So what happened? Well, the CEO of Chipotle left to take the CEO job of Starbucks. So that was great for Starbucks. Starbucks went up over 20%, but Chipotle just lost their CEO, who was doing a pretty good job too. Management changes, could be good or bad depending on what the previous management was. In this case with Chipotle, management was good. So when they left, not good for the stock, it fell. And this was on Tuesday. I still think Chipotle is a great company. Sure, the CEO leaving could be a potential headwind, but it's also down, like, how much did it fall? Let's see. It was down like 14%. So I'm like, in these levels that it fell to, way down here, which were like, let's see, 30% off its high. So I'm like, you know what? I don't mind taking a stab here, starting a position with a leap. If it falls lower, I can just add more. But I think it can probably hold up here. So I bought a leap when Chipotle was around 49, somewhere around here on Tuesday. And then I tried to wait. I really did try to wait without selling a covered call. You know, that way if it did rally nicely, I don't have to worry about the call losing me money or like offsetting the gain on the leap. But I wasn't patient enough because I think I bought it right around here. And then it fell, you know, over like the 30 minutes after. So I was like, I don't want it to get too far down and me miss my chance to sell a nice covered call nicely out of the money. So now I'll just hedge my downside and sell that covered call. Well, then it rallied right after that. So maybe I shouldn't have sold the call, but again, as I explained in my last video, it's a hedge to the downside. I am pretty cautious of risk. I don't like the downside potential. You know, I've been burned plenty of times in the past. And yes, selling the covered call limits your upside, but it helps you on the downside, right? So I like to kind of plan for the worst and sell those calls. And it rallied nicely that day, and it rallied even more the day after. And it was actually the day after where I ended up closing the position somewhere up here. So although I had that covered call kind of working against me, limiting my upside, it still ended up being a pretty good trade. So here are the details. It was just these three orders here. I bought the leap for $22.50. Let me get the calculator out, get that math going. So $22.50 was a debit. I sold the covered call right here for $30. So I collected $30. We'll add 30. And then I sold the whole thing, covered call with the leap, you know, 2 option order, 1 execution. And I sold it all for a credit of $2,420. So it was a net profit of $200. I'm fine with that. One day, even with the covered call kind of working against me on the upside, I still made $200 profit in just one day on an investment of basically $2,000. So it was about a 8 to 10% return in just one day. And that's not even annualized. So annualized would be even better than that, obviously. So I took it. Take that quick gain and then move on, free up the cash for another position. Next up, we have JD.com, the Chinese online retailer. Look at this thing. Spoiler alert, it worked out. It worked out. I bought this thing a couple weeks ago on this day right here where the white line is. That was the price of JD when I bought it, and it was on this day. So it was 2 weeks ago about. And I bought a leap. I bought like the $15 call, January 2026 expiration. And it's already a cheap stock, so you can imagine how cheap the leap was. It was like $1,175. And I did that because I want to be able to average down and scale into a bigger position. That way, if it goes down, I can lower my average and just keep buying those dips, get a better position, and manufacture the win. Simply put, right? So only $1,175 for the leap, very small. And I just did one, and it didn't drop far enough really for me to add to it. So I just rolled with the one contract. It started to pop up here. I sold a call against it, I think at 26. And then as it was coming up, I rolled it out and up. I rolled it out to this week, up to the 27, giving myself some more upside. And as you can see, you know, the rolling, I can really only do it like every week. You know, once a week, I got to wait like 4 to 5 trading days before I can re-roll it. And if the stock moves too fast, if it moves up really quickly before those 4 to 5 days come, it's just going to move too quickly for you to continue to roll successfully. Unless you really go out far in time, which I don't want to do. I'd rather just end the trade and take my gains. So that's what I did. So on this day here, with my 27 covered call, it was in the money. It had earnings popped up nicely, and I took the trade off. So we'll go over here, get a little closer. This was the leap order here on August 1st. I bought it for $11.75, so that's great. I sold a call for $15, and then I rolled it separately. So I bought this call back for $28 here, but then I resold one the week after. So it was a $26 covered call. I bought it back and then opened one for this week at the 27. So I rolled it out to this week, up to the 27 strike, and I got a net credit of what looks like $28. So that's a net credit of 28 on top of the 15 originally that was sold. So a net credit overall of all the covered calls combined of $43. That's what I stood to receive all said and done on the covered calls. I then closed them both for $12.70 right here. So you can see the covered call I ended up closing for 51 cents, and then I sold the leap for $13.21. So long story short, without the calculator coming up, I'll just tell you, on the covered call I lost $8, all said and done, but on the leap I profited $146 for a net profit of $138 on this JD position in just a couple of weeks. So let's see, it was an 11% return on my investment because it only cost me, again, $11.75 right here. This is the initial cost. It's very cheap, and I made $138, so it was 11.7% return in just a couple weeks, which meant it was a 300% annualized return, which is awesome. But even just 11% raw return is really good too. So I'll take that. I wouldn't have been opposed to staying in it longer, but as you can see here, it went up over 8% today. There was no rolling at this point. It was just too far in the money, way too far gone. So I would have been stuck at this position anyway. I would have been pretty much forced to close it today regardless. So yeah, that was that position, and now it's over and I have the cash back. Next, we'll take a look at Clean Spark. So I'm still in this. I have 100 shares at $15, and I'm too far away from my cost. Clean Spark is too far down for me to sell covered calls. But that's the beauty of scaling into the position, is that I can still buy more, which means I can still sell puts. So even though it's too far down to sell calls, I can still make money by selling more puts. So that's great. And that's what I did. And pretty simple. Right here, it was actually last Friday, before the weekend started, I sold a $10 put for $15. And then, as you can see, the yellow line is the $10 level. We didn't close down there, so that decayed throughout the week. I ended up buying it back here for $3, so I profited $12 on that put. And then yesterday, I reopened the same put, basically. I reopened the $10 put, but for next week, and I got $10 for it. And then I decided, let me do two of them. So I sold another one for the same price because it was right at the same time. So I sold two puts for $10 each, $20 total. And that's working right now. I currently have that open. The yellow line marks the strike that I sold. Sold two puts for 10 cents, expiring 8/23 is what it says. And now we wait. So I'm continuing to sell puts on this thing, trying to get a bigger position, lowering the average and whatnot. So if I get assigned on these two puts, I'll basically triple my position from 100 to 300 shares, which will cut my average from 15 down to 1180 or 1160, something like that. So that'd be a huge improvement. Of course, Clean Spark would have to be below $10, so that wouldn't be great, but it would greatly reduce my average, and then I'd still be able to add even more shares before the position is full. I'd probably look to add somewhere around $9 or $8. If I zoom out here to the weekly, I'd probably like to add somewhere around this support area. So around, probably $8. I'd buy another 300 for a total of 600 shares, and then my position would be completely full, and we'll go from there. But as for now, we're just trying to sell some puts and add to this position which is right now is just 100 shares. So nothing really much going on there. We'll move on to CSIQ. This one is done. We are out of this thing. We were assigned at 1450. We were assigned over here. So yeah, somewhere around here when it fell and closed down there, I was assigned at 1450 with 100 shares. I sold a covered call at 1450, right at my cost basis. I couldn't go any higher than that, unfortunately, for sufficient premium. So that's okay. That's part of my rules. Selling calls at or above my cost basis. At my cost basis is fine. Sure, there's no upside on the shares, but the premium that I'm receiving justifies it. So I sold it at 1450, and as you can see, which is the green line here, which is also my cost basis. We closed up there. Even after hours, we're still over there. So that's definitely being assigned and called away. So that means that's gone. And then I also sold another put for next week. So what's interesting is CSIQ has earnings next week. So what I could have done was I could have actually rolled the covered call out to next week and up to like 15 or even 1550 because it has earnings volatility baked into next week's premiums, allowing me to get a nice net credit while also rolling it up a couple strikes. I could have done that, holding on to my shares and giving myself more upside. Or I could do what I did here, which is the more conservative approach, which is get rid of the shares, wipe your hands clean of CSIQ completely, and then use that earnings volatility to sell a put instead at a nice low strike of $13, which is what I did. So that way I just having wiped my hands clean of the shares, now I'm using the earnings volatility to attempt to start a new position at a much lower price of $13 instead of $14.50 that I was just at. So that's the more conservative approach here. I'm basically preparing for a downwards move, right? But and therefore foregoing the upwards move if it were to pop after earnings. But like I said, I like to try to play it conservatively. The chart isn't really that great, right? It is kind of trending lower. So with this stock, which I've played several times already, I like to kind of just take my gains on the way up and then reset on the way back down. So I'm playing for the move back down. So I actually need to adjust this line here to the $13 strike, and I collected 15 cents for it too. So here's where I'm at now. My put right here at 13, collected 15 cents for it. It expires next week, so I got to put 28.23 there. So again, my shares were at 14.50, but now I'm setting myself up to get the same exact position $1.50 lower. So if I do happen to get assigned there, that's a much better position than what I was just in. The trade-off is that I traded away my ability to profit on a positive move. So that's the only thing, but that's okay. We collected enough premium to make this a sufficient or a reasonable decision. So let me just show you the details quick. So we had the covered call sold at $14.50 right here, got 11 cents for it. And then I also sold another put because it was down. It was in like the 13s, the mid 13s. So I was able to sell a put while also selling a call. It's a nice covered strangle. And that's, again, the great part of being able to scale into a position. If it drops, you can sell more puts. And if you're lucky, you can still sell calls. So you're collecting premium on both ends, basically. So that's what I did. I sold a put as well at $12.50 for my next 100 shares, potentially, for also $11. Both of those went to expiration. Both of them I did not close, so I got all the premium, profited $22 total. And then here's the new put for next week at 13. I collected $15 for it, and I'm prepared for earnings. If it falls and I get assigned, then I'm back in the same position of 100 shares of CSIQ, but 10% lower, at a 10% discount than where I just was. And if I don't get assigned, then oh well. I'll wait and try to sell more puts depending on where it goes. I don't mind trying to sell puts at $14.50 again, maybe 14, but we'll just keep it on watch. Right now, our money's working for us there. The last thing to talk about is just Celsius, and there was no profits here, but I'll just go over the week. So actually, no, there was something. I rolled my position. So here's the 30-minute chart, kind of zoomed out. I originally bought Celsius. Here are the details right here. The $35 call for January 2026, nicely in the money, far out expiration. I feel pretty safe. Paid $1,400 for it. This was actually the second contract. My first one was like the week before this, and that was like for $1,900, and then I bought another one for $1,400, so I lowered the average. Then I sold two calls against them at the 42 strike for this week, collected 35 cents each for a total of $70. Celsius began to rally, so my call was up here, 42 strike, right at this line right here. And as you can see, Celsius had a really good day yesterday. I think it was a 8%, 6%. It was a 6% green day right here, this massive push. And as it made that massive push, it started to test my covered call. And it was Thursday, so thankfully towards the end of the week, which means very little time left on my covered calls, and extrinsic value is very low, time value. So I was able to give it a shot to roll them, roll my covered calls that are being tested. And I was able to do that very nicely. So I got to scrunch this down. I was actually able to roll my covered calls out to next week and up $2 per share to the $44 strike way up here where the green line is. And now I stand to gain some more, appreciation. And that was this move right here. On August 15th, I rolled the covered calls for a net credit of $50. So I got a net credit of like 25 cents each. So now I stand to gain a total of $120 next week from covered call premiums coming due. That's if I don't roll them again. But so yeah, now I'm good up to $44 per share. Unfortunately, it did dip today over 3%, so now we're back to 40, but that's okay. That's where the covered calls come in handy. The stock has a down day. We're making money on the covered calls. So yeah, we're at a decent position, not a full position either. So if it drops even more, I'm able to double my position, bring down those averages, have 4 leaps so I can sell 4 covered calls and really start bringing in premiums on a full position. But right now, it's just half a position, which makes me feel good because that means if it goes down, I'm fine. I'm actually happy because that means I can get even more money invested in this thing at even better prices. So we're all good there. No profits realized this week, but we did nicely adjust the position. Now we have covered calls up at $44 at an average credit of 60 cents per contract, and I sold 2 of them. So good there. Just got to wait to see how it goes next week. I almost forgot. We got to talk about HIMS quick. I sold a cash secured put on HIMS at the 1450 strike. So this is the overarching chart here. I've heard a lot of people talk about HIMS. They're profitable over the past few quarters. They're a small company, only $3 billion. They're telehealth, so they basically connect consumers to healthcare professionals, like over the phone or over video chat, basically. And they can prescribe drugs and everything. And they're profitable now, so I figured I'd take a stab. We can take a look at the forecast here. Not a ton of analysts, but 13 analysts. 5 of them say strong buy, 8 say hold. Here are the minimum targets. Minimum price target of 16, maximum of 30, average of 22. I like to see that. It's already down 40% off its highs, so I think it's a pretty reasonable entry. We have support kind of coming up around here. So I figured I'd take my stab at it at 1450, just 100 shares. And if it gets worse than that, I have no problem adding to it and getting an overall cost basis of maybe around $12 or so on a full position. But yeah, I'm pretty confident with this. And if it expires worthless and I move on for good, then that's fine. But if I get assigned, I have no problem holding it and manufacturing the win with it. So that's it, guys. That is the week in review. $372 in realized gains. Awesome, awesome, awesome. The month is going phenomenally. Like, we're up over $1,200 on the month, and we're only halfway through the month. So it's going to be a stellar month when I do a monthly recap in a couple weeks. Can't wait. Unless I do something stupid. That's not off the table, guys. If I do something stupid, get in a jam, realize a big loss, then I guess it could go south. But we're going to try to be on our best behavior. Right now, the way the account's going and all the cash we have, there's really no reason to find ourselves in a jam just yet. So I'm feeling just very confident. We're firing on all cylinders right now, and I feel safe because there's still a bunch of cash left. So that's it, guys. I hope you enjoyed. If you did, hit the like button. It means a lot. Comment if you are interested. I do like to reply to those comments. And as always, guys, I will see you all next time.